Good afternoon. It's Jeffrey Christian of CPM Group. It's about 12:25 on Friday, the 24th of January here in New York. Got a lot of ground I want to cover today. I want to talk about some cold, hard truths about gold and silver. I want to talk about total supply, how it's not running out, government confiscations and why they're not an issue, U.S. Treasury gold, the Constitution and gold, and then I'll talk about the gold price, where we think it might go next week and why, and over the course of 2025. So a lot of topics that are a little bit off the mark from, hey, what's important to the market? And frankly, I was hoping and planning, I even wrote notes to speak today about our view of the fundamentals of gold, supply and demand, mine production, secondary recovery, fabrication demand, investment demand, and official transactions, what we expect in 2025. And I have that racked up to do, and I hope to do it next week unless the market and economic conditions intervene. But there's a tremendous amount of misinformation. There always has been in the gold and silver markets, and it's coming around again. It's part of this gigantic misinformation and disinformation thing. And there are a lot of people who believe things that are just not accurate, despite any number of efforts to encourage them to learn what's really the truth. So, while I'd rather be talking about the real gold market, I'm going to be talking about some of these other factors. I'm going to be talking about gold and silver confiscation because people are talking about that now. I cannot believe that people are talking about it, but they are. And the reality is this: no one cares about your gold and your silver. No one's coming for your gold or silver. You and your gold and silver are meaningless to governments in this day and age. It's also meaningless to banks and others. If you don't believe me, you really need to introspect yourself, perhaps with professional help, to understand why it is that you have beliefs that defy confirmation by empirical evidence and things that you can see in reality. The other big topic is there's no gold or silver shortage. There aren't shortages in good delivery gold and silver bars. There may be shortages in some investor shapes and sizes, but in terms of good delivery gold and silver bars, there isn't any. If you need or want gold or silver, contact us. If you are a legitimate buyer with adequate capital, CPM Group can connect you with major dealers who can fulfill your orders pretty much in any size. I also will talk a little bit about U.S. Treasury gold. People are saying it's not there anymore. The U.S. Constitution and gold, because I think that that's something that's going to be important over the next several years. And then at the end, I'll talk about gold prices, what we think is going to happen next week, what's going on the COMEX, gold futures and silver futures contracts, and what we expect for 2025. And as I said, hopefully next week I'll be able to talk about that. Just for the record, as I speak, gold is at $2,786 for the February COMEX futures contract. That's about 40 cents off of today's high. We have been saying that we thought it could go up to 2,800 over the course of late January, and we are now $14 away from that. Silver is $31.40, a little bit weaker than it has been, but it's up 56 cents for the day. And platinum and palladium and copper are also up. But let's talk about why your gold is inconsequential to any governments. And basically, this is not the 1930s. Back then, gold represented perhaps a third of world financial wealth. And when the Depression hit globally and banks were failing all over the place, what you found were a lot of investors and citizens, people, and corporations hoarding money taking it out of banks and putting it in gold. And that dried up the capital that was needed for our economies to recover from the Depression. And as I said, about a third, maybe more. The third is our rough estimate, but the data is very sparse, not for gold so much as for financial assets, how much money was in bonds and corporate bonds and currencies and stocks back then. These were nascent days for corporate bonds and government bonds and stocks, and the data is sparse for that. So it's easy for us to say this is how much gold was estimated to be around in the world in the 1930s, 1929, 1933. But it is difficult for anyone to say, yes, but this is how much paper wealth was out there. That's why it's a guess how much it is. But our guess is that it was probably at least 1/3 of world financial wealth in gold. That's why in 1907, during the big panic, bank panic of 1907, and in the period 1907 to 1913, when the U.S. economy was in a recession in 60 of the 90 months in that period of time, and then again in 1929 through 1932, you had real problems, partly because of the lack of that, of credit and availability of credit to get us out of economic and financial crises. Nowadays, and when I say nowadays, I mean since the early 1980s, gold is less than 1% of private financial wealth. It was 0.63% of financial wealth at the end of 2023. This chart and the next chart that I'm going to show you are from CPM Group's 2024 Gold Yearbook. We'll update it through the end of 2024 in our 2025 Gold Yearbook, which will be released in March. Taking gold out of circulation would have no effect on economic policies and conditions today. Back in the 30s, it was important. It was 1/3 of financial wealth. Today, and for the last 40 years, it's been less than 1%. So no government will say, I need to confiscate the gold or call in the gold and silver the way they did back then, because it's just not important. It's not going to fix or give governments the capacity to try to fix any economic or financial crisis today or tomorrow. This is the companion chart. This is financial wealth, and the blue part at the top is equity securities, and the part below that is private debt. Then there's gold holdings at the very top. The maroon part is government debt, and the bottom part are loans. And you can see all of that adds up to something like almost $440 trillion globally at the end of 2023. It's probably over $450 trillion. You might be able to discern little red slivers at the top of each of those bars. That's private gold holdings, 0.63%. What matters and what monetary and fiscal authorities will try to deal with in the next crisis will be everything else. Gold and silver will be inconsequential, and no one's coming for your gold and silver. And again, yes, the same is true for silver in spades. Private silver holdings represent less than 3/100, well, it represents about 3/100 of 1% of global financial wealth. No government is going to come after silver because it needs the silver to repair the world economy. And if you think that, there are community colleges all over the world where you can take some basic economics classes. Now, I see, and as I said, a lot of my reasons for comments on these topics today is that there's so much misinformation out there. And today I saw somebody on the internet saying that the US government could solve its financial problems by revaluing its gold, 261 million ounces, to $142,000 an ounce. It's nonsensical. It's just pure nonsense. For one thing, the US government doesn't set the price of gold. The US government said, hey, our gold's worth $142,000 an ounce or $10,000 an ounce or anything else. The rest of the world will look at him and say, yeah, right, okay. And you're going to end the Ukraine war in 24 hours, and you're going to annex Greenland and Canada and Mexico and the Panama Canal. Yeah, right, okay, sure. The US government doesn't set the price of gold. The price of gold is set in the world market on a continual basis by all buyers and sellers. The futures markets have a short-term effect on the gold price, but the real factors determining the long-term gold price, trends, directions, and levels, are the supply and demand of physical gold in the global market. And the buyers and sellers engaged in that market determine the price of gold, not the US government. So that's not going to happen. Now, it's funny because in that same interview where this guy was saying $142,000 worth of gold, there was another person who said, oh, all of the gold has left Fort Knox already, which is nonsense. Treasury gold is still there. No one's taken it. There is, and it's available online for free, a bar by bar listing of the bars of gold that are owned by the US government. There's a total of 261.5 million ounces of gold that the US Treasury owns. The Federal Reserve Board stores some of the gold for the Treasury. These are the locations of the gold owned by the US Treasury. And you can see 13 million ounces held at the Federal Reserve and another 1,000 ounces and 73,000 ounces here and there. Some gold coins left over from pre-1933, various places. The mint holds most of its gold. The mint is a subsector, a division of the U.S. Treasury. 147 million ounces of it is in Fort Knox. Another 44 million ounces in the mint in Denver, and another 54 million ounces in the mint's facility at West Point. So the gold's still there, despite what people who are trying to get you to buy gold in a panic might say. I want to touch on the Constitution and gold because, again, there's some weird beliefs that fly in the face of what the Constitution says. Article 1, Section 8, Clause 5, the fifth paragraph. Article 1, Section 8 lays out the powers that are vested in the U.S. Congress, the federal U.S. Congress. And paragraph 5 in clause 5 says the Congress shall have the power to coin money, to regulate the value of it, and then also have foreign coins and fix the standards of weights and measures. The key part is to coin money and to regulate the value of it. But Congress has that power. And it's very interesting because the phrase regulate the value thereof, what does that mean? You will hear people, true believers in the gold market, talk about, well, an ounce of gold's value is an ounce of gold, and it doesn't matter what the price is per dollar or rupee or pound sterling or yuan. But you can't measure the value of something by itself. You can't say an ounce of gold is worth an ounce of gold. Well, you can say it, but it's a meaningless statement. And in the Constitution, where they worked very hard to make sure they didn't have any meaningless statements, they said the Congress has the power to coin money and to regulate the value thereof. And when Congress regulated the value of money, it regulated it in terms of its value relative to gold and silver. And if you can't measure the value of something by itself, that valuation states that money, U.S. money, is not gold and silver. Now, additionally, the Congress is vested with the authority to coin money. That's important because you've seen state governments pass laws saying that people can use gold and silver to settle transactions, i.e., act as if it's money. It's not actually legally what they're doing. The state law might call gold and silver money, but the reality is that the states don't have the power to call gold and silver money. The Congress has the power to say what actually is money in the United States. So those state laws, regardless of what the words used were, what they're really saying is that commerce may be conducted in gold and or silver in a barter transaction. And you know what? The funny thing is, that's always been legal in every state of the union. Anyone has always had the capacity to barter in transactions. And they can barter butter, they can barter gold and silver, they can barter services. You know, I'll bust up your shiver robe if you'll give me a bowl of oatmeal. So the power to determine what is money is vested in the Congress. God help us there, not states. The other place, and the only place where gold and silver are mentioned in the Constitution, is Article 1, Section 10, Clause 1. It's not Paragraph 5, I'm sorry. And that's important because Section 10 lays out what the states can and cannot do. The first line is, no state shall. And the Clause 1 says, no state shall enter into a treaty, blah, 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 coin money, or make anything but gold and silver coin a tender in the payment of debts. Now, first, remember, Section 8, which is actually 2 sections before Section 10 in the Constitution, has already said that it's the Congress that determines what's money, right? And coins it. So what does Section 10, Clause 1 mean? It means that the federal government, after the Revolutionary War, wanted gold and silver reserves to back the money it was to create. The states, meanwhile, owed the federal government money to pay back for loans that it had given with Continentals during the War for Independence. And the federal government, with the Treasury run by Alexander Hamilton, said, we want those debts from the states paid in gold and silver so that the Treasury and the federal government could build up gold and silver reserves. That's what Section 10 says. The drafters of the Constitution were much more precise in choosing the words than, say, the people who are drafting laws in various states saying that gold and silver can be used as money. The people who drafted the Constitution worked very long and hard to use their words very carefully. And it says that the states may not pay their debts in anything but gold and silver. And their debts that the states had were to the federal government. And that's why that clause is in Section 10. It specifically prohibits states from making money and from paying the federal government anything but gold and silver. What comes next? Let's talk about the gold outlook. In the coming week, we expect to see heightened political and economic uncertainty. more so than we're seeing this week. I said we had thought the gold price could spike to $2,800 this month for a variety of reasons. It got almost there today. I'm just looking, it's still basically where we were at the start of this 20 minutes ago. And we also have the February COMEX gold futures contract becoming deliverable next Friday. Now, as of yesterday, there was 26.6 million ounces of open interest in the February futures contract. That will have to be rolled forward or closed out or delivered into by the end of February. Typically, you'll see this in an actively traded month, and by the time you get to the first delivery date, next Friday, the 31st of January, most of that open interest will have rolled forward. You already have seen 22.5 million ounces of open interest roll forward into the April contract, the next active April contract. So you're seeing that roll already, which is one of the reasons. I mean, if you ask me, why is the price $2,786.80 right now? Part of it is that political and economic uncertainty. Part of it is concern over what's going to happen over the course of 2025 and 2026 in terms of the economy and jobs and recessions and inflation and the dollar and currency markets and international political affairs and domestic political affairs. And part of it is people buying those futures back. We see this sometimes, but not always. In April of 2011, when you had 360 million ounces of May COMEX silver futures, the price of silver went from $32 to $50 over the course of April. If you look, people were buying very few coins. Silver ETF investors were selling silver as the price rose. The only people who were really visibly buying large volumes of silver were the people who were short the May contract, and they bought 360 million ounces of silver futures, not physical silver, but silver futures, over the course of April, driving the price from $32 to $50. By the end of April, they had completed that roll into the July contract. There was no more congestion in the April contract or the May contract. And when May became deliverable, the price went from $50 to $32 in about 6 trading days. Sometimes you can see this kind of tightness or congestion in an active COMEX gold or silver or platinum or palladium contract. We saw it in palladium 2 times last year. And it can cause a brief spike in the price of the metal, and then it comes back off. We could see that next week, but sometimes the roll occurs without pushing silver or gold or other metal prices higher. So it's not guaranteed that as those 26 million ounces of remaining open interest in the February COMEX contract gets rolled forward, it's not guaranteed that that will push the gold price higher. I suspect the fact that the gold price is up $21 today is partly reflecting that roll, but it's also reflecting a lot of other macroeconomic and political concerns. And I can tell you that with great authority because it's not just gold that's up sharply today. Gold's up $21. It was off yesterday. It was higher the day before. But silver, platinum, palladium, copper, and a host of other assets are up today. So one of the sets of factors driving gold prices higher today is not gold specific. It's macroeconomic or political. Okay. We might see higher prices next week. And then we might see prices come back off a little bit once we get into February. March is an active silver contract. You have a lot of open interest in the March contract. We're going to have to wait and see how that's going. For 2025, we are still projecting record annual prices, even if prices don't rise as sharply over the course of the year as they did last year. Gold prices rose 27 point some odd percent from the beginning of 2024 to the end of 2024. We're not expecting necessarily a 27% increase over the course of the year on daily prices. We are expecting record gold prices, but gold started 2024 at $2,200 an ounce, roughly. It ended the year at $2,660 an ounce. It had already risen that 28%, right, on a daily basis. And it had risen sharply on an annual average basis. It's starting 2025 at $2,660. It's already risen $120 from that level twice over the course of January. And we expect to see prices higher, 2,800 we've been talking about seeing intraday prices get up as high as $3,000, more or less. We expect prices to be volatile and high this year, but they're starting from a higher base. So we don't necessarily expect as sharp of an increase on the annual average basis as we saw last year. As I said, I really wanted to talk about gold fundamentals today, but I felt it was important to deal with some of the misinformation that is bubbling back to the surface of the gold market. I apologize for that, but I think it's very important to remind people of the realities of the gold market and the realities of gold's status and stature and place in the global economic and financial markets. Next week, unless market conditions or economic realities command greater attention, I am planning to speak about gold's fundamentals this year: mine production, secondary recovery, fabrication demand, jewelry demand, investment demand, and official transactions. Until then, take care. We do have our gold yearbook, silver yearbook, and platinum yearbook coming up. We have our Silver Fact and Fantasy online seminar coming up at the end of February before the PDAC. You may go to our website. You can pre-order the yearbooks for this year. You can order last year's yearbooks if you don't want to wait until late March, late May, late July for the current yearbooks. You can contact us at info@cpmgroup.com and ask us how we can help you manage your precious metals and commodities exposure more effectively. Until then, take care of yourself, take care of those around you, try to do something good, if not for the world, at least your local community. I'll talk to you next week.